Thank you very much for making a date on the marketplace. Welcome back. Now, the Ghana Union of Traders Association, Guta, has begun an initiative known as the Income In, Income Out policy to deal with the cedi's fall against major trading currencies. According to the president of Guta, Dr. Joseph Obeng, the initiative, in collaboration with the Ghana Export Promotion Authority, will require every importer to trade in an export commodity, the proceeds for which would be used for importation purposes. The initiative, when successful, is expected to lessen the burden on the dollar. Dr. Joseph Obeng made the disclosure in his welcome remarks at the Graphic Business Stamping breakfast meeting in Accra this morning.
We've instituted a policy, income in, income out, that will help shore up export so that we can also have the forest from our export and then bring our goods. This is the concept of the income in, income out. It's just like the olden days, the barter trade. They bring in something and take in something. And so this is what we've developed, and we want to use to help government in the quest of boosting our export. But then also, I said that they say we import so much, but we beg to differ. The things that we import, is it required? Is it demanded? If it is not demanded, we do not even bring it in the first place. Then we have the export to contend with. And so we said that even the things that we are manufacturing locally and all that, some do not have the competitiveness, the competitive edge. And that if we want to do something that will enhance on the real generation of the forest and all that, then we have to think about where the areas that we have the competitive edge. And I was also talking about what government have been depending even now, the cocoa, the cashew, and so many other things, to do proper investment there. Because those areas, you know that it already bring you the resources. So what prevents government from even enhancing on those areas so that, because it's the area that have already have the sources, so that we don't reinvent any wheel.
All right, so Dr. Obeng was actually speaking in an interview with Joy Business at the sidelines of the Graphic Business and Stamping Bank breakfast meeting here in Accra. Now, Governor of the Central Bank, Dr. Ernest Addison, has also re-emphasized the position that the falling cedi can be saved through other measures, including reducing importation. Dr. Addison urged players in the oil and gas sector to also improve local content as a key measure to sustaining the local currency. Let's hear from him.
You have non-resident investors in your market that are looking at the return on your domestic bonds. If they see that the interest or yields on other markets are more attractive, they will take their investments out, and the impact of that sort of exit from your bond market would reflect in the value of your cedi over time. So we have to work. We have to work on all fronts. We have to work to improve our export earnings. We have to work to improve local content in the mining sector, in the oil sector. We have to work to reduce our import dependency. If you look at the numbers for imports of rice, for example, you will be shocked to see how much Ghanaians spend on buying rice. In addition, we have to also improve our debt management strategies so that we shift the financing of the budget away from non-residents and also away from the sovereign bond financing. I see the article in the Graphic Business this morning on Ghana mortgaging its future to save the cedi, which I think it's an important point, but we need to refocus the issue more on the budget, because the sovereign bond issuances were done to finance the budget. And the impact on the exchange rate and the balance of payments, I think, is a secondary matter. And therefore, the question to ask is, what are the use of proceeds from these sovereign bond issuances? And how do you, what has the government done in terms of utilizing these resources to finance projects that would improve the capacity to export for the country? This is where the question is, rather than just using sovereign bond financing for current expenditures, you want to see that such resources are directed at, projects that would have, major important implications for the capacity to export, for example. So that, I think, would be one of the important recommendations that should come out of a discussion of this nature at this forum. Obviously, the need to improve the business environment in terms of the ease of doing business would also matter. Re-examining our laws to improve business environment, making sure that we have business-friendly regulations which would make it easy to move goods across the country, looking at our retention agreements, again in the gold and oil sectors, promoting non-traditional exports, etc., etc.
So those were the thoughts of the Central Bank Governor, Dr. Ernest Addison. Meanwhile, Managing Director of Stanbic Bank, Alhassan Andani, has also appealed to the trading community to defend the Ghana cedi with other choices they make. He believes that a passionate effort by all stakeholders to make good use of the currency without relying much on the dollar can strengthen the cedi.
The cedi, as our MC has said, for me, it's not a creation of any foreign power. The cedi is a creation of the people of Ghana, and we have to defend it with our blood at all times. We should not talk down the cedi. We should work up the cedi. And my take on this is that it's about the choices we make as a country. The choices between exports and imports. And I've been having a very interesting conversation with the president of Guta to say that choices for imports are about consumption, and literally anybody can consume. So they tend to be easy choices. Choices about producing goods and services that are of competitive standards, both in your country and outside of the country, are very tough choices. Are we as Ghanaians choosing the easy path, which leads us nowhere, or are we choosing the difficult path that would lead us somewhere? And the comment somebody made around being an oil exporter, importer, and wanting foreign exchange, that conversation should have been addressed to the person next to him to say, what are you doing to ensure that you bring in dollars to help me import my oil? So let us just review the situation and say that if you look at the biggest export earners into the US, all those companies and their chief executives and creators are less than 50 years old. All of us sitting in this room, about 45, into that bracket. What choices have we made, like those youngsters, whether they're in Singapore or Thailand or Vietnam or the US, making to ensure that we can make our country globally competitive and bring in exchange to ensure that we can defend our own currency.
So this year's breakfast meeting was under the theme, Achieving a Sustainable Exchange Rate Stability, Our Options. Let's now turn attention to some other developments in international crude oil industry. Oil prices have hit their highest since November on Tuesday after the US announced all waivers on imports of sanctions hit Iranian oil would end next week. By this move, the US is also pressuring importers to stop buying from Iran by the 1st of May or face sanctions. What impact will this development have on the local and global economies? Energy expert Ishmael Ejekumhene joins us via Skype for some more understanding. Good afternoon, Ishmael. Welcome to the marketplace.
Good afternoon, Manu.
So how did you come here in the first place? What do you make of this, relationship between, the U.S. and Iran and its impact on the global oil industry?
Well, I mean, the U.S. president, assuming office, has always maintained that the deal that Americans signed with the Iranians in 2015 wasn't a good deal. So he withdrew the deal, and then last year when they were withdrawing that deal, or America was pulling out, they granted exemption to a list of 7 countries who could still import oil from Iran. And that exemption actually expires in May, I think on the 2nd of May. And he's saying that those waivers are no longer going to apply. So essentially, they want 0 oil exports from Iran.
Now, so does it mean that, because I understand that, Saudi Arabia and the United Arab Emirates, as well as other OPEC countries, have vowed to actually increase or push in more supply to offset the impact. Do you think this particular move by the US could engender any serious impact on the global market as well as our local industry here? And what are these implications?
Well, they said in that same circular that they were going to impress upon the Saudi Arabias and the UAEs, as you mentioned, but you just mentioned the fact that oil prices have started going up. So whether or not that, ramping up production from those countries would help stabilize the oil prices, it remains to be seen. But obviously, the prices have started going up. And for us, the local economy, I'm sure we all know that petroleum prices are most likely going to go up unless the currency appreciates in value or not. If it doesn't appreciate in value and you have the global prices of crude going up, it's going to translate into the price of petroleum product. But also benchmark price that was used in the budget was nowhere $74 mark as we are witnessing. Then we may be able to generate some more revenues from the export of oil. But in terms of the local economy, it's going to translate into increases in petroleum products, the price of petroleum products.
All right, so for a nascent industry like ours, or a country which, so to speak, a net exporter of petrol, what should we be doing to cushion ourselves, from this impact?
That's a tough one. I'm sure you know since the country adopted a policy of food deregulation, things like this is really beyond any state interference. And so unless, of course, if prices were to go up, government decides to do something about the taxes and the levies. In the free-for-all market that we operate, OMCs and the BDCs are going to just pass every cost on to consumers. If this had been envisioned or had been foreseen, then you could have looked at hedging or something like that. But clearly you can't hedge within this short period of time. And the Americans have stated that the duration of this sanctions will be determined by the response of Tehran. That's how the Iranians respond to this new sanctions. But for the short to medium term, I'm not sure much could be done except to experience the full brunt of the global movement being transferred to local consumers to pay.
So do you think it is time to say, hey, let's halt, our export of the portion of oil that we produce here and use it for the time being, and then later on, try to export it again when normal conditions return?
Two issues here. One is whether our domestic production will be able to meet our entire demand. We know that on a daily basis, we need something in the region of 100,000 and 120,000 barrels to meet our domestic demand. Are we in a position, are we producing that much? That's the first question. The second question, and I guess that's the most important question that or issue that we all need to avert our minds to. Even if all the Jubilee partners, including Gnpc, decide to sell their products, I mean, mind you, if we decide to buy every crude produced from the Jubilee field, it's going to be at the going market price, okay? So maybe the only advantage would be that the money wouldn't leave the country or wouldn't have to find those monies to import. But whether we import or we are buying from the Jubilee partners, they're going to sell it to us at the price that they would have obtained if they are sent it to Rotterdam or wherever they would have sent it. So we could take that decision. Mind you, the law doesn't say that we can stop all export. I think the law, if I remember correctly, gives Ghana access to, I think, something in the region of around 22,000 barrels a day from our indigenous production that we probably can say that we are keeping here. But whether it's 22,000, whether it's 100,000, they're not going to sell it to us in cities. Even our own Gnpc won't sell it to us. The Gnpc lifting the Ghana share won't sell it to us in cities because they need dollars to be able to even go ahead and pay all their participating interest and all the cash calls that are going to be imposed on them. When Talo says they should bring money, they are not going to collect the money in cities. So it's rather unfortunate that sometimes decisions that the US and the European unions, some decisions they take and some sanctions they impose, we end up suffering for that. But we could look at that. But I guess it's also a little bit too early to even see the full or tell the full impact of this sanction. I mean, the prices went up by close to 3.4% yesterday. Today, I'm not sure it's doing the same magnitude. So maybe it might not be as expected. But whether we are sourcing the crude from Jubilee or from TEN or from our gas fields or petroleum fields, we're going to pay for them in dollars. It's not going to be in cities. So it probably won't change much.
All right. So finally, before you go, now with these geopolitical trends looming on in the industry, is it time for African oil producers to form something like a cartel to protect the interests of consumers?
Oh, good question. To form a cartel, you competing, I mean, in Africa, it's only Nigeria that is a very heavy player. Of course, you have Angola as well. But if we all come together, what would be our market share? Okay. If it's still not going to be significant, then we can't make a difference. But it's important that we see what leverage we have as Africans. Whether or not Nigeria will be prepared to come and form a cartel or come into a coalition with Ghana, Angola, Equatorial Guinea. Bottom line is, what impact are we going to make even if we decide to keep or reduce or increase our production? I think it's market shares and the quantum of your contribution to the market that would give you the power to act as a cartel or not. But going forward, depending on how many more discoveries we're going to make, we could consider looking at that. But I don't think that will be a solution for the short to the medium term. It's probably a long-term solution that we're looking at here if we decide to form a cartel or something like that.
All right, thank you very much for your time. Ishmael Ejekum-Hene is an energy expert. He's been commenting on the current situation where the United States of America has declared a suspension for waivers on Iran and threatened all importers of crude oil from Iran sanctions if they continue to do so by the 1st of May. Let's have some tidbits of all that's happening within the industry. Let's still stay within the local oil and gas sector. The Parliamentary Select Committee on Mines and Energy has commended the Ghana National Petroleum Corporation (GNPC) for ensuring value for money for projects executed by the GNPC Foundation in the Western region. The Africa Center for Energy Policy (ACEP) recently criticized the GNPC's decision to spend $43.5 million on corporate social responsibility for 2019. However, during a recent visit by the Parliamentary Committee on Mines and Energy to some GNPC's project sites in the region, Chairman of the committee, Emmanuel Akwesia Gyamfi, justified the company's expenditure.
The Parliamentary Select Committee on Mines and Energy have commended the GNPC Foundation for the prudent and impactful investment taken within their corporate social responsibility across the country. The chairman of the committee, Emmanuel Akwesia Gyamfi, addressing the press after a working visit on some projects being undertaken by the GNPC Foundation in the Western region, Honorable Gyamfi stressed that requests for a raise in their budgetary allocation are justified given the evidence of quality and impact of social investments across the country.
And so far, so good. What we've seen today, we have gotten the report in Accra, but we wanted to come down and verify and feel what is actually going on. And we are very much impressed. Last year, their budget was about 28 million USD. This year, because of the good work they are doing, we've given them 43 million USD. So that answers your question. If next year we see the kind of projects they are implementing and they come to ask for more, I believe committee members and Parliament as a whole will grant that. I have said that the best way to distribute the oil revenue is to make everybody feel that he is having something in his local community, and that's what GNPC Foundation is doing.
Executive Director for GNPC Foundation, Dr. Dominic Kwesi Edua, disclosed that the success they have chalked with these investments are due to a more rigorous and strategic monitoring and evaluation and commitment demonstrated by contractors working on the projects. He, however, admitted upon complaints by contractors that the pricing of contracts are relatively unattractive and that's needed to be reviewed.
I won't give the credit to my monitoring and evaluation team. I think the contractors have done a very good job within schedule because it's one thing that we don't joke with at the foundation. Quality of work, superb, as recommended by most of the MPs who are here. I think the only issue they raised was the costs, which they feel that is low, that we need to review it up close. It's something that we'll consider and look at it.
Now, the Regional Coordinating Council of the Western North Region is encouraging farmers to allow government to cut down overaged cocoa trees. This is part of government's efforts to restore the country to its position as a leading cocoa producer in the world. Available statistics from the Ghana Cocoa Board show 17% of cocoa trees in the country are diseased and 23% overaged. The present situation has contributed to the drop in cocoa production over the years. Deputy Minister for the region, Alex Tete, wants farmers to trust government's solution. He was speaking at a conference of Western North Conference of the Western North of SDA singing band. Yao Jima has more in this report.
Farmers and landowners each will be paid 1,000 cedis for a hectare of cocoa farm earmarked for destruction. Mr. Tete says government needs farmers' cooperation to execute the project. For 3 years, the farms will be replanted alongside food crops and tree species to protect the cocoa plants. Mr. Tete wants farmers to measure for its long-term benefit on their livelihood.
Who will cut down the trees? The government will buy the planting sachets, they will plant it, they will pay the farmers, and the government will take the responsibility of the farm for 2 consecutive years, so that at the end of the 3rd year, we'll hand over the farm to the owners. And I have used this opportunity to advise the farmers that it will allow us to start rehabilitating their farm. Because if you look at the yield or the output of our cocoa is dwindling, and at the end of the day, if we don't do anything, Cote d'Ivoire is taking over all the tonnage in the foreign web.
Mr. Tete also announced government is set to embark on some infrastructure projects to improve and open up the area for employment opportunities. Meanwhile, the Seventh-day Adventist Church leadership says it has commenced training of youth in vocational skills, besides the setting up of more bakeries to augment the existing one. Pastor Francis Tinakwa Beidu is president of Western North Conference of the SDA Church.
Restaurants, vegetarian restaurants, bread making, and projects. These are some of the little ones we have actually decided to embark on to help the community in which we live. The water project, we have 2, one at the Biso and one will be at Sevioso. And the bread making, currently we have one at Sevibekwai. We intend adding 1 to 8 at Sevioso.
And it's a wrap for the marketplace this afternoon. Thank you so much for making time with me. My name is Emmanuel Abuaji. We have listened again, same time tomorrow.